Hey there, it's Jay Rod here for Rich Retirement TV, along with Zach Scheit, my trusty companion here.
Hey, J-Rod.
Yeah, man. Uh, Today we got a great topic, Zach. This is one that you and I are very passionate about. Tech stocks. They seem to be the most. They seem to have the most opportunity, but does that also mean that they have the most risk? And you being a former hedge fund manager, you know risk better than anybody in the game.
That is the most important thing. I mean, that's what my boss kind of drilled into my head day after day was you have to protect your capital first. You can make money and you need to make money on the capital that you've saved. But if you don't protect that savings, then you're not doing yourself any favors and eventually, you could give it away. And that's a really interesting kind of umbrella to start out by talking for tech stocks because tech stocks are really popular right now. And that's really because tech companies are growing. It's one of the areas of our economy right now that's seen a lot of growth. Profits are increasing, and it's because there's so much innovation going on and so many new things that companies are doing. It's exciting, and that naturally drives stock prices higher. So I love technology. I love technology stocks. I love the market that we're in right now and how it's giving us many, many opportunities. When you invest in tech, though, I think that you need to look very carefully at what you're getting for the money that you're paying. And as investors, there are certain metrics that we look at, and these are available on any free financial site like Yahoo Finance or FinViz or Google Finance. But look at the company that you're buying, look at how much profit they're generating, and specifically how much profit they're generating for every share of stock. This is called EPS, or earnings per share. Look at how much your companies are actually earning for the shares of stock that you're buying. And then we also want to look at how much are they expected to earn next year? What type of growth rate are we seeing in profits? So for a company that's growing its profits very quickly, it makes sense to pay a little bit more because over the next year, 2 years, 5 years, you're going to see those profits increase a lot. If we're not seeing profits, if we're not seeing that type of growth, then you don't want to pay very much, if any, for that share of stock. So it's just something to be able to look at and understand what you're getting for what you're paying for. Now, in tech stocks right now, I think we're seeing kind of almost a tale of two markets. You've got a certain number of tech stocks that are very popular. These are names that you know very well. You probably use them in your own house. Amazon, Google, Netflix, Facebook. These companies are very popular with consumers, and their stocks are very popular with investors because we all know that tech stocks are great and we all want to be involved, and why not buy shares of these well-known companies? Well, the problem with this is that many of the most well-known companies are now trading at prices that are much higher, and that's just because everybody and their mother are all trying to buy the same few stocks. That's a problem, and that leads to risk. And that's the risk that we should be aware of and kind of protecting against when we invest in tech stocks. On the other hand, there are dozens, no, hundreds of tech stocks that are smaller companies that are coming out with new innovative products that are making new components that are going to go into the iPhone or the next Android or whatever. These smaller tech stocks aren't trading nearly as high. They're not nearly as expensive as some of the more popular tech stocks, simply because their story hasn't gotten out yet. And so those are the tech stocks that I really want to focus on a little bit more because A, the story's not out yet, so you can buy them relatively cheaply. And B, their potential growth is much, much bigger. Think about Apple, how hundreds of billions of dollars worth of profits, their company, the cash that they have on hand, that company is not going to double, triple, quadruple over a short period of time simply because it's already so big. But if you have a smaller company with a new product that they could maybe sell to Samsung or sell to Apple or sell to a bigger company, we could see that type of smaller situation increase tenfold just because you're starting out small and you have a lot of opportunity left. So I like to look for tech stocks that have a lot more runway, gives you less risk, and it gives you more potential for return. So tech's a little bit funny that way. Sometimes the best known names are actually giving you more risk than you would have from less well-known names. But overall, it's a great area to be investing in and tons of opportunity that we're seeing right now. That's my story. John, thanks, J-Rod.
As always, man. I mean, you put a really good picture on it. I mean, there's with tech stocks. I mean, we go back to why are they doing so well? Why are they so created such growth in the American economy? Because they don't have the same investment. You don't have to spend as much to get a tech business off the ground. So naturally, these businesses are geared towards earning more profits than other companies. So that's, if we think about why they're doing well, it's not, some of the more popular stocks are crowded trades, right? Like everybody and their mom's in there, just like, fad,
Yeah.
any number of fads. Once the fad goes away, people could go. But if companies are good, you always want to be looking for the best opportunity. But specifically when it comes to, I think you nailed something else big there. I think the S&P 500 has 500 some odd stocks in it.
Mm-hmm.
If you open up CNBC or Yahoo Finance, there's only 5 or 6 stocks that are being talked about. There are literally 490 plus stocks that are getting very little coverage every single day. That's nothing but opportunity. It
really is. And many of those stocks will eventually work their way into being one of those 5, 10, 15 stocks that's mentioned. And when that happens, you'll already be the first to the party and be able to enjoy the rise that comes along with that notoriety. So good point.
Absolutely. Especially when you talk about these smaller names, say maybe a 10th or, a 25th of the size. They're fantastic. A lot of the bigs, the Apples, the Microsofts, they're buying these companies. They're buying, they're acquiring them. It's cheaper for them, less risky to buy those companies that are doing something really well than to go out and spend the research and development on it. Right.
Well, and that opens up a whole new topic that we need to talk about in maybe one of our next videos is buyout opportunities, because that's a big area that specifically for tech, where big companies are buying out the smaller companies just to be able to tap into that new technology, that new product, that growth area that the big companies don't have access to right now. So let's do that on our next call.
That's your sneak peek, right?
That's right.
Great stuff. Well, thanks, Zach, for another great conversation on tech stocks. Well put. But for Rich Retirement TV, I'm Jay Rod here with Zach Scheit. We'll see you next time.
See you guys.